Supermicro computer is up 89% this year, and almost no one's talking about it. The company builds the hardware behind today's AI explosion: racks, servers, and GPU systems powering everything from NVIDIA's Blackwell chips to the data centers running your favorite models. Yet, here's what investors are asking themselves. If demand for AI hardware is this strong, why did Supermicro stock just stall? Because while growth headlines scream AI growth, this company just dropped guidance that made Wall Street flinch. And that tells me one thing: there's a disconnect between hype and execution. In this video, I'm going to break down what Supermicro actually builds, the red flags in their latest numbers, and why this stock could either take off like NVIDIA or faceplant like Peloton. Hi everyone, my name is Rick Orford. I've been trading since 1999 and I am not a financial advisor. That's a good thing. I break down the numbers so retail investors like you and me can make smarter, more confident decisions with our money. With all that out of the way, let's get into it. Supermicro Computer was founded in 1993. From modular servers and storage to full rack scale systems, they built the hardware behind today's AI surge and designed solutions that move teams from blueprint to deployment and fast. In plain English, they sell the computers that let AI companies just do their thing. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Supermicro's core is data center building block solutions, which is a mix and match approach that lets customers tailor entire racks for data centers, cloud, and other high-performance computing. The company leverages AI infrastructure with turnkey GPU platforms and pre-integrated AI superclusters, including systems built around NVIDIA's latest Blackwell chips. Beyond single servers, Supermicro delivers complete racks so enterprises can match bigger AI players in performance and cooling without the headache of integration. A highlight is their GB200 NVL71 rack solution, which pairs a Grace CPU with a Blackwell GPU in a 48U liquid-cooled package. With a network of cloud providers, enterprises, and research labs, Supermicro looks wired for speed. But remember, AI speed doesn't always mean investor returns. The hardware race burns cash as fast as it builds hype. The numbers, they still have to back it up, and I'm going to cover the financials in a future video, so be sure to watch out for it. So, Supermicro is building the rails for the AI boom. But now, the question is whether it can stay on track. So let's take a deeper look at how the stock is performing. Supermicro stock currently trades around $58. The stock is up 89% year to date and 24% in the last 52 weeks. That is steady growth, but not parabolic, not even consistent enough to keep the bulls interested. Given the 60-month beta being at 1.5, the stock moves at a little over 1.5% for every 1% that the broad market does. So Supermicro isn't exactly a roller coaster, but it's definitely not a Sunday drive either. Now, in my last video, I covered the reasons Supermicro stock could go up, but we got to look at the whole story. So how do you spot the warning signs? What can make the stock turn the other way? Because the higher the hype, the harder the fall, just like we saw in real time. Guidance: meet gravity. After its fiscal fourth quarter financials for 2025 were released, shares declined due to the outlook, and it was discussed at length in my Discord. That was a fresh red flag, not a green light. And when situations like this, it can send the stock reeling. And that's precisely what happened, and the answer may not be a buy the dip moment, at least not yet. Now, the results missed what analysts wanted. Ongoing concerns can absolutely keep pressure on the name. And that's why falling prices don't automatically mean opportunity. Sometimes it just signals turbulence ahead. Product headlines don't cure everything either, because even with new NVIDIA systems shipping, is now really the time to buy? Well, that's the million-dollar question, because product launches, they don't fix guidance. Execution does. Valuation questions, margin pressure, and execution risk can overshadow even the most promising launches. And this is a headline-sensitive stock. And the news cycle, well, it cuts both ways. There is a reason most heart attacks happen on Mondays, and it's because nobody likes surprises. And yes, there was another red flag, and it still has to do with their financial reporting. Investors, they don't like bad news, but they have an even shorter fuse for accounting issues. It's just one more reminder that sentiment can flip on a single update. They got to get that sorted, because that kind of trigger puts a premium on clean execution and steady guidance every quarter. The upside is that their engine is still humming with global demand, so future clean quarters can flip the story from noise to momentum. So you could say that Supermicro's future isn't a tech problem, it's a trust problem, and that can take some time to rebuild. So, with all that out of the way, is Supermicro stock a buy? Well, a group of 19 analysts rate Supermicro a hold with a high target price of $60. So, Wall Street is basically saying, prove it. Not bearish, not bullish, just cautious. At this price, you're paying for growth, but you're also buying a ticket to a roller coaster ride, just not one on a rocket. Demand is global, and Supermicro is rolling out their NVIDIA Blackwell Ultra systems at scale. Faster installs, bigger builds, and bigger invoices. That's how you grow into a valuation. But growth only matters if margins don't leak, and that's the make or break point for 2025. I still want margins that stop wobbling and numbers that read clean. But to give credit where credit is due, the runway is long, and the partners are serious. If you invest like a pilot and not a daredevil, start small and add as shipping stays on time. Scaling holds and the control work checks out. Because in markets like this, it's not about catching the rocket, it's about surviving the re-entry point. But what do you think? Are you going to be nibbling now, or are you going to wait for clearer skies, so to speak? Let me know in the comments below. And while you're there, of course, don't forget to like and subscribe. It helps others find a video, it supports the channel, and you won't miss out on any of my future deep dives. Well, folks, that's it for me today in this video. I wanted to thank you so much for watching, and I'll see you next time.